Alrighty, so in this video, I just want to go through a very simple concept of waiting for your trades, okay, and not chasing price. And there are a few benefits to this, but most of the time, traders do not want to follow this. They're chasing price and they're just impatient. They're not waiting for the trades to come to them. Why? Mostly because of greed, the fear of missing out. I'm sure most of you have heard this term FOMO, which means the fear of missing out. Um, in theory, it sounds really easy to follow, to avoid FOMO, but in reality, FOMO gets a lot of people, and it's one of those things where you really have to work on yourself as a trader to manage FOMO and possibly eliminate it from your own life with enough self reflection, self improvement. You don't even have to feel that FOMO anymore. I used to feel a lot of FOMO, and you know I'd have to trade every single day. Even if I tell myself not to trade, take a day off, I couldn't do it. I had to be in the market. I was afraid of missing out. And amongst other things, such as, needing that adrenaline, feeling like I've got to be doing something. I've got to be in the market in order to be doing something, in order to be making money, quotation marks. But that's not the case, okay? So I've given this example here on the chart showing a swing high up here and swing low down here. Okay, now we have a range in here. Okay, and you can imagine if you are waiting to buy. Let's say you feel bullish, you're waiting to buy. Let me use the replay tool. Let's say you're around here. Okay, and you're waiting to buy. Imagine this range does not exist yet. And this is the 4 hour chart, right? People that are impatient generally are on the even lower time frames than this. So imagine seeing this bullish candle appear, and now they're thinking this is the bottom. I've got to buy this, and starts dropping. It actually pumps up again. Okay, if they didn't get scared out of this one, it comes up again, and then comes down. Big drop, big drop. Gaps up here, falls again. Imagine you're just waiting for a green candle, and it drops again, and only now, finally, do we know that price actually retraces, right? So if they were waiting to buy, they would have to mark out a range and wait for price to come down to a discount of the range. And you can see in that range, it actually comes down to a discount. If they were chasing it here, they'd be in drawdown, which is generally, it's normal, but it's not a nice feeling. And generally, you'd get less RR if your entry was up here and your stop loss was down here. Great. But your RR would be less, right? Because we know this trade actually comes down. Okay, but if they were waiting for here, they'd have a lot more room. And at this point, if they didn't already take profit at a 1R, they'd have 2R, possibly even 3R. And hopefully at that point, one would have taken profit. As we can see, the trade comes all the way down over here. It comes all the way back to equilibrium of this range, 50%. Okay. We have fib numbers, 61.8, ICTs, optimal trading, optimal trade entry zone, which is around 62 to 79, with the midpoint 70.5. Let me see, in this area. Okay, and we see it comes almost to the 62 level, and then we fall from there. Okay, so imagine you were trying to catch a short, and let's say price was down here. Okay, and let's say you're trying to get in a lower time frame and you're just trying to um, get a trade. You put it at the swing high, it comes up one more time and then drops lower. You get stopped out and it moves, and then you just end up chasing price. You see it coming back up. Maybe you're in, you get scared out because you are it comes back about 3 4 hours, even if you didn't get stopped out, and it just keeps going, and maybe you're targeting a low such as here, and it doesn't get there, and then it stops you out. Okay, so putting back on the premium and discount, it is a lot better to wait for price to come back. If you want to short, come back to an area of premium, okay, above 50%, and then short. If you took a trade there, okay, great. You would have waited, right? Rather than trying to short down here, the retracement still at a discount. You're just getting stopped out. You think that's a high. If you look here, it actually comes all the way down. So one could be thinking that's the move. I'll get in here and I'll put my stop above this high, and then you get stopped out. Swing high here with candles. I'm getting in here. It looks like it's going to move. You get stopped out. And only when it comes back to premium does it actually move. Okay, so this is just one example. It actually takes out the low and it comes all the way back up. Okay, so that requires takes out this low, all right, for the liquidity, and then it finally moves. So the whole point of it is waiting for your trades, being patient, not worrying about missing the move. Because when you're patient, you're gonna get the better setups. Um, you're gonna get the higher RRs, and you're gonna win trades a lot more. Okay, it's just that's just the way it is, and perhaps this is not always the best example, but many people use Fibonacci tools for their trading, um, and even just that in itself, with a good analysis, you can get pretty good trades. You wait for it to come back to 50%, or maybe the you get a run, wait for it to come back to 50%, or even the 62 whatever level, and then take the high. You're getting your long here, wherever. Some people are wildly profitable, even if a 1R or 1.5, or even if a 2R, very, very successful traders. You do not need high R type of trades. Okay, they just happen less often, and it is a bit more, you got to be a bit more precise, right? And in the right conditions. But yeah, not only that, smart money, if you believe in those concepts, they are buying at a discount and selling at a premium, right? I mean, this makes sense. You do not want to buy at a premium price and you do not want to sell at a discount. Okay. If you buy a house, you want to sell at a higher price. If that's your, what you want to do. You do not want to sell at a lower price. You just lose money, right? And it just works with being efficient, and it works with psychology as well. And that's why they do it. Okay. So yeah, I hope you found that video insightful. Um, Teach you to be patient. You just get the better setups. Okay, you might have to wait a bit longer, but that is fine. That is fine. Sometimes sitting out, not taking a trade, that actually equates to more money, right? Rather than trying to jump in, being afraid you're gonna miss out. You lose, you lose, you lose. You're just losing money, and that's like a negative win. Okay, now you got to catch up with that. You got to make an equal amount of wins, if not more, depending on how much you are in drawdown, right? Because if you may incur volatility drag. Basically, if you lose, for example, if you lose 50% of your account, now you have to make 100% just to get back to where you started. So you have just essentially doubled your effort by losing half your account. It's not what you want to do. Trading is a game of longevity. It's a game of perseverance and surviving the market. It's not a game of winning. It is a game of surviving. Okay, who can take the most punches and Get the prize money at the end. All right, all fighters get the prize money. You do not need the first place. All right, you can make a you can make a good income as a fighter just by surviving, living long enough, and of course you get better as you survive. You improve, and therefore you get better, better than you were yesterday, better than you were the day before, and you just make more money because your skills are better, but it's because you have survived long enough. Imagine being a fighter, and you just go crazy during fights, and you open up yourself to risk. You get a roundhouse kick to the back of your neck. You're paralyzed. C'est la vie. You're out of the game, and that's not what you want as a trader. Okay, so yeah. Till next time, guys. See you. Goodbye.